and that has caused the markets to panic again. Okay, and so let's go ahead and share our screen. We're going to share screen, share sound, and smile big. Look there, look big. Smile big and look happy. Welcome. Okay, we're going to accept, and we'll turn off the waiting room. That way, people can just walk in and come in. And welcome, John. Nice to have you in the room here. Okay, happy Thursday to you. Again, my name is Dr. Greg McLeod, Elite Traders University, and we are welcome to Bulls versus Bears, the strategic market forecast. I'm your host, Dr. Greg McLeod. I'm a 30-year trading veteran, former Wall Street insider, currency strategist, one of the world's largest forex broker dealers in the world. And I'm so glad to be with you today to share my insights and thoughts about the upcoming trading action. And so I'll direct your attention to the screen. If you can see my screen, type the number 1 in the chat box. And if you can also hear my voice, type the number 2. Make sure I'm not talking to thin air. Make sure that you guys are coming in. I'm coming in line and clear. If you are on YouTube, make sure you can message me directly and let me know where you are from, where you are hailing from, what you're trading. Any questions you may have too. If there are questions, we will answer them in the Q&A at the end. But again, welcome to Bulls versus Bears Strategic Global Outlook. And that's me, Dr. Greg McLeod. And let's go ahead and look at the risk disclaimer on your screen. Make sure you understand all the risks associated with foreign exchange trading. And any examples that I present are going to be basically, hypothetical examples. They're not trading advice. If you want trading advice, consult your licensed professional, your financial professional who can help you in the markets. Okay. And again, I'm the founder and CEO of Elite Traders University. This is our 30th year of operation, and we've helped traders around the world create 5, 6, and 7 figures in profits using my proprietary trading system, which I developed while working at the world's largest forex broker dealer in the world in New York City. And I've also wrote the book called The Gold Rush Blueprint, which you can get access to by scanning the QR code. Okay, so let's go ahead. Our agenda, we're going to look at the U.S. dollar index, the basket of currencies versus the U.S. dollar. We're going to look at the euro dollar, pound dollar, Aussie dollar, dollar yen, dollar CAD, gold, silver, and oil, S&P 500. But we're going to start the economic news and world news. Not many people's favorite topic, but it's what really drives the market. It's the underlying, it's the backdrop of the play of the drama of trading. The economic calendar is our backdrop. So let's go ahead and jump right into it right now. Let's go ahead and jump into our economic calendar. We're going to go to my market heat map. It's the arrangement of currency pairs by percentage change. You can get access to it for free. mymarketheatmap.com. It's basically a Swiss Army knife of tools gathered together, including the heat map, to help you navigate the markets. It's one of my top secret tools for finding trading opportunities in the market. Green is an uptrend, red's a downtrend, and gray stay away. Let's go ahead and go down to the heat map. Is you can see the dollar Swiss, the dollar pairs are trending higher because of the flight to safety during the war. We can see our other risk currencies are doing rather poorly. But let's go to the economic calendar. Economic calendar, you might have to refresh your screen if it gets stuck. Just go ahead and click refresh, and then click show more, and then you have a full economic calendar. I want to focus on the high impact items. Those are the red smiley faces there, and we're going to go ahead and save that. Right. And there's lots of news from a lot of different countries, but we're just going to focus on the G8. And we're going to go for next week. That will take us to the, that would take us from there we go. Well, we're going to start with Monday, March 16th. Monday, March 16th. We look at the flag. Basically, very simple to use economic calendar. Don't be intimidated by it. It may look like a lot of data and numbers. And say, well, Greg, I don't know about these numbers. I don't know what they mean. I don't know what any of this stuff means. Just focus on the flag. The flag tells us what we want to trade. And we see we have the maple leaf flag. And you got to know some geography as well. You got to know what your countries and your flags. This is Canada, the Canadian flag. And so I'm basically going to be focused in on the currencies that have the Canadian dollar in them, such as dollar CAD or CAD Swiss or CAD yen. And so those currencies are going to be impacted by the the economic releases that are happening around this time. Okay, now so a lot of the biggest problem that I find traders will tell me or ask me is like, Greg, I don't know what to trade. I don't know what to trade. How do I find a good trade? Well, the economic calendar tells you what the smart money is looking at. And so that's what I don't recommend you trade the news announcement unless you have an edge, such as a system like Pip and Run. But you can wait an hour or 2 hours after, and the interest in the Canadian dollar is still going to be there. So you can still fish in that pond, right? So you wouldn't go, I want to go trade, New Zealand, Swiss. Well, you don't see the New Zealand flag here. You don't see the Swiss flag. So you should be trading that, right? But you could trade Euro CAD or you could trade Pound CAD, right? Because there's going to be general interest and activity in the market. We need volatility and activity to make money in the market. Okay, so I hammered that part home. So we have lots of inflation data out of Canada. Inflation data is very important. It tells central banks whether to raise rates or lower rates, and interest rates are the biggest drivers of currency movement. And we have core inflation rate basically tamed, looked like it's flat. We don't really care about the numbers so much. It's just that it's going to be pretty active around 8:30 a.m. Monday, March 16th, right? And then later on, we're going to have also the New York Empire State Manufacturing Index. So dollar CAD would be a setup we would look at. We will also look at, since we have the American flag, there's a couple of ways we can trade the American flag. We can trade the dollar yen, or dollar CAD, since we're already in CAD, or euro dollar, because the euro is considered the anti-dollar. And if there's good news for the for the U.S., it works a little backwards though. Good news for the country, for the U.S., is bad news for the dollar, and you might actually see the euro benefit if this is a good number. But it's forecast to be a very bad number. 7.1 was the previous number. -1 is the forecast. The second number here is from the right is the forecasted number. With this big gap, we would probably see the dollar rally if this is true. Remember, this is just a forecast. They don't know. They estimate it, but a lot of times they're wrong, right? They get paid a lot of money to be wrong. And so and if they're really wrong, then the market goes, hey, the market will believe that these guys are right. But when they're proven wrong, then the market has to adjust. And those adjustments cause big currency movements, right? Because then the market goes, oh, no, we've already priced in worse than expected. Maybe it's better than expected. Well, then the euro goes up, right? Because they've already priced. The market is a discounting, what they call a discounting mechanism. And what a discounting mechanism is it basically takes the value. All pieces of news are already priced in the market, right? But if they've priced it in wrongly, right, and since we have a lot of fake news, that's going to be really easy, right? Just like they priced in that tariffs would be bad for the market. Well, they priced that in, and when it didn't come to pass, well, guess what? The market was on the wrong side of the trade, and we saw big rallies in the market to adjust or to reprice in this fake news, right? So be careful. A lot of these forecasted numbers are fake, and so if they're repriced, then we can actually see markets move in the opposite direction, which provides us with an opportunity to trade. Okay, moving right along, Australia. We're going to have one of my the interest rate decision. Interest rate decisions are very, very big, bigger than inflation data, because that's the central bank's final. They took all the data about inflation and unemployment and everything and retail sales, and they come up with a decision on interest rates, right? And so either they're going to raise interest rates because the economy is too strong, or too hot and inflation is rising, or they're going to cut rates because they think the economy is weak and needs help. Well, Australia is going to keep rates unchanged, which means they're not going to raise. They don't think there's inflation. They're not going to cut because they don't think the economy is weak. Well, that's actually a good sign and could be positive for the Australian dollar. But in light of a war overhanging with the dollar very strong, it might nullify this. So remember, take all this stuff with a grain of salt now because we have an exogenous event. The war is over, is Trump's. Well, use the word Trump, right? Trump's everything else, right? So, but keep in mind, if something happens like the war ends over the weekend, right? As fast as it fingers crossed, pray the Lord. If the war does end, Iran surrenders, and we have peace in the Middle East, right? It rhymes. It's been rhyming for a long time, but it hasn't been there. But if it ever does, all these numbers are going to go out the window. The market's going to rally, right? And you got to be positioned for that, right? I mean, you're seeing some of the predictive functions on a lot of these indicators are way oversold. And so we could snap into some really, really powerful positive moves in the risk asset currencies like Aussie dollar, Kiwi dollar. We could see huge runs in gold. Gold hasn't gone anywhere either. So usually gold is a asset that you run to because of fear. But inflation is, fuel inflation is what they're worried about now. Okay. Moving right along, Wednesday, March 18th, we've got the core inflation rate in the Eurozone, lots of inflation CPI data, and that's going to come out Wednesday, March 18th. And it's going to come out at 6 a.m. Eastern time. So if you want to get up early and trade that, that's going to be very interesting, probably even for the first hour, maybe until the open. The open is like 9:30. So the euro is going to be I want to trade the Canadian Swiss. If you trade what you want to trade and not trade with the economic calendar, then you're on your own, okay? And then if you complain that, hey, it didn't move and nothing happened, possibly because you were not where you're at the wrong party, right? They were a party with there's flat beer and crumbly chips, and no one was there, and they're passed out on the floor, and you missed the real party. The party was where the flag is, right? So this, looking at the economic calendar, tells you, well, I don't want to trade the news. Well, if you don't want to trade the news, you can trade after the news, but you got to be, if you want to be first to win the party, that's fine. You can show up late. You can be fashionably late to this party, but be at the party. Don't be somewhere else. Don't be in Euro, Norwegian kroner. I had a student reach out to me and go, well, Greg, I was using your strategy and it didn't work. I go, what were you trading? Euro, Norwegian kroner. And what party was going on with the Euro Norwegian kroner, right? When it was like the Bank of England rate announcement, and it was Super Thursday, which means it was like all Bank of England data, or UK data, with UK inflation, UK interest rate announcement, UK, it was just all UK, and you decided to trade this. Well, I thought it looked interesting. You thought, and it looked interesting. Two words that will destroy a trader: what you thought, right? Don't stop thinking, right? You have to, look and react, right? And good point. Adrian says when optimism to go in because the first hour is too risky when news, some spikes and after the market trend. Yeah. Now, I haven't seen too many spikes after the war. I think people are just too afraid to do a lot of tricky stuff, right? A lot of tricky wiki stuff, right? I think the tricksters are kind of like, look, the war is out here. We're kind of scared because I saw some really nice moves in the, Keelan pointed that out with the interest, the non-farm payroll. Non-farm payroll last week was like dream trade. No, there was no spikes. No long-legged dojis and spinning tops and stuff like that, and market maker liquidity sweeps. None of that, right? Because they're probably all on the sidelines, like, no, we're scared. There's a war out, right? Anyway, We have a Bank of Canada rate announcement coming out as well. It's widely expected for them to keep rates unchanged at 2.25%. The Canadian dollar is going to be in play. Then we're going to have the FOMC economic projections at 2 p.m. and the Fed interest rate decision at 2 p.m. as well, and a press conference. Usually the night before or the day before an interest rate announcement, nothing moves. Why? Because no one wants to get ahead of the Fed, right? When the Fed, that's, all the central banks, the U.S. central bank, the Fed, FOMC doesn't even spell bank, doesn't even spell central bank, but FOMC stands for the Federal Open Market Committee, right? And so they're, Open Market Committee, they're going to come out at 2 p.m. Eastern time. After 2 p.m., which normally I don't like trading after 12 noon, but this is the one day that you'll probably find trading after 2 p.m., you're going to find a lot of trading opportunities, right? And if you're trading on a Tuesday night or Tuesday, it might be kind of boring. Even with all this stuff going on here, people will probably still wait for this one right here. This is the granddaddy of them all, the Fed interest rate decision. And they're widely expected to keep rates unchanged at 3.75%. And then they're going to have a press conference after that. And then the markets will probably kick back in, from hunkering down in the tornado, in the storm shelter, right? And again, our thoughts and prayers go out to the people of Indiana and the Midwest who are suffering from the tornadoes. The deadly tornado strikes are hitting people, and so again, keep those people in prayer. And that's why I live in Vegas. I've got tired of the storm thing in Texas. I remember rescuing my daughters from twin tornadoes. There was twin tornadoes in Plano, and they were, and I went to school, picked them up. I said, no, because they were going to be locked in school for like hours in their shelter. I go, no, we're going to go in my shelter and we can hang out. So I picked them up from school early ahead of two tornadoes. And so I said, nah, I'm not going to do that anymore. But I love Texas, though. Anyway, moving on here, 1845. We're going to have New Zealand data coming out, which is great. This is going to be a great day to trade. I'm so excited. I love trading Australia. When I see the Australian flag, I love trading their news. If you want news without spikes, this is the one, right? I know for Adrian's in the UK, it's a little late for you, but if you could, get up for this one and trade this one. So this is, I'm going to circle this on my calendar. Wednesday, March 18th too. It's gonna be popping. I'm gonna enjoy it. Australian dollar has been very strong. It was very strong before the war. We're probably in some type of a wave 4 correction. In fact, I'm looking at it right now. It's spiked. We're at the 70.99. We're at the weird lows like 70.75. And so anyway, we'll talk about those in tacticals, but I'm excited about that. And Bank of Japan has an interest rate decision as well. Their interest rates are so low, 0.75, and this is like historically high. Normally it's like 0. Okay. So that's going to be that for the Bank of Japan. You might see impacts. If they keep rates unchanged, we could still see the yen has been very strong because of the geopolitical events. The yen, the dollar, the Swiss franc usually strengthen during times of war, geopolitical unrest. Thursday, we have this is Super Thursday, right? Because look, you're gonna have the Bank of England rate announcement, MPC meetings, MPC vote hike, and then you're gonna have unemployment rate out of the UK and claim account change all on Thursday. So this is a Super Thursday. So this is, Thursday, March 19th. You're gonna trade the British pound, and then you have a Swiss National Bank rate decision too. So you can trade pound Swiss. They're going to keep rates at 0. Can you believe that? They're one of the few central banks at 0. And the Bank of England widely expect to keep rates unchanged at 3.75%. Jobless claims are going to be out as well. Then they're back 9:15. We're back trading the euro, and they also have their interest rate decision too. So we have four central banks: the U.S., the U.K., the Eurozone, Swiss National Bank, and the fifth one, we're going to have Japan. So lots. I mean, next week is going to be very critical, and then we started off of Canadian data, and we're going to finish off the week of Canadian data too. Retail sales year on year supposed to increase from 0 to 1. Retail sales month on month supposed to drop from 1.5 to negative 0.3, and retail sales ex autos supposed to rise from 0.1 to 0.2, and then that's it. So finally, okay. So we got a lot of big data. Next week is going to be a very critical week. So let's go ahead and go into the technicals and look into that. I'm going to show you. Let's go ahead and go. There we go. Okay. So this is our trend spotter for 2026, the new trend spotter. And we're going to, okay, it's going to refresh. We're going to look at the trends. This is a new segment, but Greg did not change our time frame for our trend. We'll come back to trend spotter. We'll go into our charts. We're going to go to a single chart here. Single chart. And we're going to remove everything. Remove all of our indicators, remove all of our lines. Got to pick up your stuff when you play, right? And get rid of all of our indicators, right? We're going to start with the US dollar index, the DXY. The DXY is the US dollar index, collection of currency pairs by percentage change that with the basket, our basket, right? Our basket. Start the weekly. And we can see that we have this, even though it doesn't look very, very much, this is our rally. This is our Iran war rally, right? In the US dollar. And when we had a bunch of support, right? In the 9630. Can you imagine we're hitting this area and all of a sudden it just happens that the war happens and then we rally off this area. We have a reason to rally off this area. We do have, again, resistance here in the 100 spot 38 area, which looks like we're heading toward. What we have a triple bottom, which is 1, 2, 3, right? And then we have we had some resistance at 99.43, right? Now we break this area, and it probably will. We probably will, because if the war continues. If it drags on, then the dollar continues to become safe haven, right? And we could rally up to the 102.04. Now, I believe eventually what will probably happen is that the markets will get used to the war. It's still a new thing, like when they had the Russia-Ukraine war. The markets were kind of frozen. They were kind of scared. And then people just got used to it. The stock market went to even new highs during the war, right? So we had that. In March, seasonally, is traditionally a good market for stocks and risk on assets and things. So, but the dollar index continues to rally. Right, we go down to our daily chart, and we can see it just making higher highs and higher lows. Structurally high, I mean, we're looking at a target of 100 spot 38. So bulls versus bears, I am bullish. Sure, I've got this going on here, and okay. There we go. Again, we have higher highs and higher lows. The dollar. Now, once we understand where the dollar is going, then it's very simple. We go to the other currencies. Like let's go to the euro, the anti-dollar, right? But we're gonna remove all. We can turn off our alerts. That way we can not have a little chiming going on. And I'm going to remove all drawings here and let's go to that weekly chart. Here's the euro, and you can see that we are, it's like the inverse of our US dollar. And we have our spike low. That's like our anchor low here from this 95.41 area all the way up to the high of 120.86, right? And we can see that was a high from January 26, 2026, that we hit the high there. And now we are pulling back. The 23% retracement at 114.85. And so we moving on down like George and Wheezy, going backwards, moving from, from the deluxe apartment in the sky to Harlem, I guess. I don't know. Moving on back, or the Queens. Moving back. No offense to the guys who are from Queens, but here we go. We're moving on back, right? There's a lots of support here in this 114.85 area. We haven't really gone there yet. We tried to rally early on back on the 10th and was rejected. And so now we're at a double bottom here on a Thursday. Will we come back and retest the low of 114.89? We could. Let's go ahead to a 4-hour chart. You can see we're crawling around there, right? Looking for that, trying to double bottom, try to rally. That failed. That was a failed attempt to try to double bottom and rally back up to old resistance here, and it did not, right? I'm going to say goodbye to you too, right? Right. So we could, that our third 23% retracement here is 114.86. If we can break 114.86, then we could see a spectacular decline, to the, especially if we see data that supports the war, that the war will continue. Looking for there we go. There's our arrow. They moved the arrow to the other side here, right? So I'm still looking for that 111. We can break this flag pattern here. The next level here is a 38% retracement. One spot 1117. Bulls versus Bears. I'm bearish. Euro. Okay. All right. We could drop that down, and still we got to break the support here. Okay, let's go ahead and move across the English channel to the pound versus US dollar. I don't know why they don't call it the European channel, right? It'd be kind of like the Gulf of America, Gulf of Mexico. What if the European Union became belligerent and called it the European channel? All right, so here we go. This is we're going to go back to our weekly chart. I'm going to remove all of our old previous lines here, and this almost pseudo double top is still was our rejection point there, right here. We wicked up a bunch there, and we had our anchor here, which was we had the death of the Queen, and we had this rally, kind of a Prince Charles kind of a coronation rally. And now we've kind of like topped out, and we've got the 23% retracement here on the weekly chart coming into play. Typical double top or pseudo double top target is this zone right in here. That zone there was a lot of interest there. There were a lot of people that took off. I mean, this was an area of interest. We can see that area of interest retested. It could act like a magnet toward price, pulling it on down to this area. This is the 1.3129 area, right? And so we saw lots of congestion in here, right here. Well, this was our turning point in the market. So we expect price to return back to the scene of the crime, return back to the turning point, right? To test. There's a Fibonacci there. There is old support there to support it, right? And then so that's the 130. Call it the 130.45 area. Now, if we can break that the typical retracement is a 38% retracement, which is like 125. That's like way far out. But for scalpers, hey, we're just looking for small price moves. But the momentum, and this is a really nice setup here where price rallied to the Fibonacci and rejected. And you can see there's like I'm going to zoom in on this. We've got this kind of a bear flag pattern, which is set up beautifully. We had this rally up, trend line break, and so we could see price, this flag pattern, right? We have this bear flag pull, and if we extend that, let's clone that, right? We can take the distance from here to the flag to the consolidation. We look for a break, and the break would take us to below that demand zone and push us down to the 128.86 area, right? And if the war prolongs itself and the dollar continues to make haste to the upside, well, then remember, this is the anti-dollar. We could see this move come into play. Okay, so bulls versus bears, we are bearish the pound dollar as well, and because it has the dollar in the back of that, right? Let's keep on going with this this grouping of pairs, as long as it's all grouped together, and go ahead and go to the Australian dollar. Very strong, beautiful chart, and I think we've gone to maybe 75 or so if we did not have the war going on, right? But we have what we call an inside day candle, a small body candle inside. And let me go ahead and switch to traditional for you guys who may not be enlightened to the. Where are you? You are. Candles. Okay, all right. There we go. All right, that changes things there. We have a bearish engulfing, basically engulfing the previous candle there, right? So that looks pretty bearish, right? This bearish pattern. And our last bit of support trend line was down at maybe like call it the 7,000 area, 0.700 area. There's a bit of support there, right? We have a kind of the double top, a topping formation where price rallied, moves sideways, and then we expect a drop back down to support, right? That's what we are looking at, right? What it validates this, we get a break above 70, the high of 71.88, which was the high of March 11th, and we wicked up out of there. Exhaust. This was an exhaustion move. Probably price it one more time. Let's just try it, and boom. We just ran up a whole round number resistance at 72, 0.7200, the figure, and price just dived before he even got there. Just no, right? So we just turned around, and so that is a bearish sign for on the daily chart. Go down to a 4-hour. We see we're just trending down. We're at 7. Currently, we're at 0.785 by 86, right? Move on down to a 2-hour. Small body doji spinning top. We could have a morning star, kind of a retracement, but probably overall a retracement and overall downward trend channel, right? You can take your trend channel and extend it, and it's kind of like just walk the dog, walk it down to the next level, right? Now, if we were to go back to that daily chart, and actually, we started from this point here, take our Fibonacci from that low. That is our November 26th low to our high. We can see that we have we're currently trading at the 11% Fibonacci. So just the here is 69.82. That represents about 100 pips, 100 pips from where we are to the next Fibonacci. So there's still room to the downside in this trade. Bulls versus bears, we are bearish Aussie dollar. Long term, I'm bullish, but the long as this war persists, and there's a gap down here, the abandoned baby, and a gap down here at 68.91. The abandoned baby is when you have, it's when you have the island reversal where you have this candle outside itself with a gap, and that's down here, right? So that could be very interesting. Okay, moving right along, Kiwi dollar is probably doing much of the same. A little bit, looks like it left the station a little earlier. And we can see on the weekly chart, we have been trending down anyway for a really long time, right? I mean, it has, but there has been rallies, big long rallies of 2 and 3 months in between. We did hit a multiple bottom at the 55.63 area where we rally our low. This is our low from November 17th, 2025. We saw a rally up into resistance, and now we are coming back down, and lower highs, lower lows. We had almost the same high, like a double top, and we can get back down to 55.63. We just got a little bit of a. Let's just move on down to a daily chart, and we can see. Look at that turning down. Probably maybe a head and shoulders, bearish head and shoulders pattern there. We have a shoulder, a head, maybe the makings of a smaller shoulder, right? We're making lower highs, lower lows, and we could, take a measurement objective from the top of the head to the neckline, right? And we can clone it like a sheep there. And then, oh my goodness, it just matches, right? Be a pretty, if I were a swinger position trader, this would be something I would look at to hold for the long term, and you will get positive carry. Again, not a trade recommendation, but it is, it looks tasty for the short side. Bulls versus bears. We are bearish the Kiwi dollar. Okay, let's go ahead and go to the dollar yen. Dollar yen, interesting, because it has a risk adverse currency in it. The yen is usually a safe haven, but look what's going on here, right? A triple top. We rarely see triple tops. 1, 2, 3 triple tops. Look at the green candles just surging, right? On this weekly chart, and we're at the 159.16. We break that. This gap candle here, we're going to break right into our the 161, the high, the all-time high that we saw, or not all-time high, like the 30-year high. The 30-year high from July 1st, 2024. I don't think we've been any higher than that ever, like 30 years. Yeah, 1990, 2000. Remember the 1990s, like Friends and Seinfeld. That's a long time. So not an all-time high. Probably for some people, they have not even been alive that long, right? Maybe someone that was born in the 80s, like, or born in the 90s, like, oh yeah, that's right. You guys be 30 years old right now. So not all-time high, but a 30-year high. And so there's a nice gap of space there. There's probably stops there. Once all the stops have been cleared, all the sell orders they're cleared, then this may just go ahead and rocket and fill this gap. This filled it in 1 week, one move, one candle, 1 week. So 1 week we could move from 59.16 back to 61.92. Usually with the velocity that we dropped. See how fast we dropped, and then we fill the gap. And now we've got this gap to fill right here. This bad boy right here. Right? That's like gasoline, full of gas, and you got the a room full of gas, and you're smoking a cigarette, you got a lighter or a candle, and you walk into the room, and boom, the whole thing blows up, right? So all this is available. All these buy orders are up in here, hanging around, and the moment we cross into that, it's going to trigger probably a massive rush into this market, right? So that's what we're looking at. So bulls versus bears, I am bullish. Right. All right. Dollar yen looking good. Let's go ahead and go dollar CAD. Dollar CAD, such a strange currency pair. And then we can see on the on this weekly chart that we really haven't gone anywhere. Canada produces oil, so the oil is keeping this kind of buoyed up. But their economy is got this whole Alberta succession kind of thing, and so you've got this kind of weak prime minister over there, and then so you have some and the kind of like the feud between North America, between U.S. and Canada, and so we really haven't seen, but typically when you have countries that are neighbors that have currencies, they don't really move very far either. If you look at euro pound doesn't move that. The Eurozone and Great Britain, and they don't. They don't move it. The currencies, they're geographically close, and the currencies don't really trend, right? And you got Euro Swiss is another one, EURCHF, right? That's another currency that this was actually taken off to the south side, but you can see for months it hasn't done anything. That's in a range. And I think we finally broke out, right? We finally broke, right? And you can see that people like the Swiss franc, even though they offer 0% interest, right? But the currencies which share a common border, they're not a lot of fun to trade. So dollar CAD, going back to that, I mean, it's almost like neutral. Well, you have to drop down to a lower time frame, and we're close to support. So we probably would be favored with the U.S. I mean, we have a U.S. Fed announcement, interest rate announcement, which could take us back to this level of resistance here, 37.54, right? If you take the wick out, you can go back to maybe to close the previous candle. Back here, we have a full body here at the 137.25, and we're 136.24. So we are constructively bullish dollar CAD. Not very bullish, but just enough, because we're in a range and we are kind of trending off the range, right? Gold. Let's go to gold. And we got a lot of stuff going on there, but it really hasn't. A lot of stuff hasn't gone on. We really haven't gone anywhere since this big run up, this historic meteor, this shot up, and then it shot down, and then this rally, which is a lower high, which is bearish, but we have higher lows, which is bullish. So we have this triangle of indecision that we're in, this Bermuda Triangle of confusion, right? Or we haven't really, in fact, I've stopped trading it because it's just not going much anywhere, right? But it is still an asset that we're watching, and sometimes when you don't watch it, that's the time where it actually moves, when you're not looking. So we want to look at it on a weekly basis and see, what's going on with it. And we can see that we really haven't broken out of this range. We got a low 5,007. I was able to buy that. But then once we got to the top of the range, we haven't gone anywhere. And let's drop down to a 4-hour chart. And you can see each one of these is 4 hours of pure nada, right? Boring. We probably at the, so bulls versus bears. We do have a long. I'm always bullish against the long wick, and there was a guy by the name of, I think, Nia Fuller. We talked about the Pinocchio bar. We got this long wick doji. So I'm bullish against the doji. But maybe some type of a Fibonacci retracement to a fib, to maybe one fib, right? We're almost there anyway. I mean, we rallied up the 38% retracement would be 51.41. We have a small body candle. This is a full body red candle. Buyers stepped in and pushed price back up to here, and price closed here. So we went from a low of maybe 5,111 all the way back up to 5,031, a $20 move. Buyers stepped in, and we're right here. So even though this looks, it's all red, it's bullish because why? The bears could not hold prices down below here, right? So this has a bullish slant to it, right? I would be more inclined to buy it than to sell it, right? And you can see I think it heard me. It just moved when I just said that, right? So bulls versus bears, go down to a 30-minute chart, and you can see, maybe 15-minute, maybe a 5-minute. There is a kind of a trend. As long as we can stay above the trend line here, we might continue to rally. So bulls versus bears, I am slightly bullish, but I would actually stay out of it. Okay. So let's look at oil. Oil is gone bonkers. It's gone up and down. Look, we hit 95. Now, there's two kinds of oil, guys. There's Brent crude and there's WTI. This is WTI. Brent is actually trading over 100, or was trading at 100. This is the Dow Jones Industrial Average. Look at this, down 600 points as oil's jumped. S&P down 1%. Dow Jones Industrial Average down 1%. NASDAQ down 1.3%. Russell 2000 down 1.2%. The VIX is even higher. The fear index is up 8%. So we've got, and then oil, see the Brent, Brent's 98, and WTI this is West Texas Intermediate. WTI stands for West Texas Intermediate. It's a lower grade oil because, it has a lot of sulfur in it. Brent crude, the North Sea crude, is supposed to be a higher quality of less sulfur, does not need as much refining, so therefore it commands a higher price. And it's found, it's stuff going through the Straits of Hormuz, right? So so even the Saudi Arabian oil, they don't call it Saudi Arabia, it's Brent. It's all Brent, right? And so it has a higher premium, not only because it's a higher grade of oil, but it's also the oil that's coming through the Straits of Hormuz, right? See, Brent oil hits 100 after Iran's new prime leader says Strait of Hormuz must remain closed. We'll see how long that lasts, right? So if you ever confused by the price of oil, WTI, West Texas Intermediate. In fact, I used to live in Plano, Texas, which was, we're not too far from the Strategic Oil Reserve, which was in Cushing, Oklahoma. And so that's what I love Texas gasoline prices. If you get some supermarket coupons, you're paying $1.95 for a gallon for gas, right? But the Brent crude. So even if they release the Strategic Oil Reserve, it won't impact the Brent crude price because the Brent crude is coming out of Saudi Arabia and goes out to China, Malaysia, Vietnam. It's going out to countries who are in that part of the world. Now, U.S. does export oil. We do have a net surplus of oil and natural gas, which we export. But the releasing of the Strategic Oil Reserve is not going to impact the Brent price, right? So oil is It was on in fact when those rockets, and we talked about this in our school, in our the schoolroom. I'm trying to find a tab where we can talk about school. SKO. Yeah, I put an article in there about the Strait of Hormuz, a no-go zone, and we talked about how some tankers were actually hit by the some Iran boats, right? So they're holding the boats hostage, and the U.S. Navy's not really prepared to defend against these smaller boats, right? And so that's what drove up the price. So we had a spike. This is WTI. Let me get the Brent crude price. UK oil is the ticker for Brent. And you can see that at 11 o'clock, we hit over $100 a barrel. Now we're doing some type of that was, so we go to our weekly chart. And you can see that, this was actually setting up. It's really interesting, and I actually, for those people who are in our group coaching call, I do mentorship 2 hours a week with a private group of people. And I shared with them my insights, and then got 2 hours to do that. And I said, we were sitting here like December. I said, we're going to see something's going to happen. We're going to have a big move in oil. We got a double bottom at the 618 Fibonacci. Something's going to happen. I don't know what it is, we kind of knew what was going to happen, but, something's going to happen if Iran, right? But, it's like we couldn't break 59, the 58 area. We kept hovering around 60, 60, 60, 60. We had a big move, and then we have an old high, 135, and then bam, right? And I think we go higher. I think we actually, if this is our AB, our three-wave pattern, I'm not saying it's a 5-wave, but if it's a 3-wave, typical 3-wave goes back to the old high, which takes us to 134.06, right? So we can see UK. This is Brent crude. We can see Brent crude hit that the old high. This is the high that we had back on February 21st, 2022. Not sure what happened news-wise there. I should do my research on that. Something happened to take price that high. But remember, we were, and really, oil was like so cheap, right? We had chance. The U.S. had a chance to during Donald Trump's first term, when we had oil drop down so low, they had a chance to actually refill the strategic reserve at $25 a barrel. But Schumer said it was a bailout for the oil companies and basically kept the U.S. from buying cheap oil to refill the depleted strategic reserve, right? But ABC, we're looking at 1/3. So bulls versus bears. Hey, that's what we're looking about for oil, right? Oil is going to continue, but don't worry, don't worry. I think after we reach this area, though, that'll probably be the timer of when we will maybe exit the war. With that high of 146 that we had back in 2007, still hangs out there, right? But that could be a problem there, right? But usually what happens with the law of supply and demand, when price gets to a certain level, what happens is people start producing oil. You got to figure, gee, I could sell my oil for 146. Let me go find some more. So it just brings more online, and that will usually cause like this really bad drop that happened right after it hit that high, because more supply was discovered, and so we could see that. But all of our commodities are going to be higher as well. Let's go to Bitcoin. And if there's something else with the few minutes that we have remaining, if there's something else that you would like us to discuss or talk about. Oh, the S&P 500. Yeah, we forgot about that, right? Don't want to forget about that. It's so bad. I just kind of went over that. But look at Bitcoin, though. Make a little comeback there. And this is very interesting. I'm going to show you our low. And then we take our Fibonacci there. And we have almost tagged this 618. And we're coming back. And there was a lot of congestion back here. Lots of congestion. And price came back and tested the top of that. It got right in there. All that congestion that's here. Remember, price has a memory. Price has a memory. And that memory extends, just like your wife or your girlfriend remind you what you did wrong. Your mom remind you what you did wrong. Well, price is a memory. And it remembers that it had a lot of trouble getting through this area. And guess what? It starts to do the same thing. And we might have fulfilled our head and shoulders target over here. Maybe safe to come out of the water, right? And did we complete our price objectives here? Our neckline, we might have. I don't think so. I think it's a little short. Oh, yeah, it's a lot short. You need to hit the bottom of that. I mean, horseshoes and hand grenades were really close. Adrian says, "Slow." That's so true. Remember you? Yeah, they remember everything, right? Anyway, so there's Bitcoin. So this might be our zone at 70. And I said 71,000 or so would be our zone. We got as low as 59,000 on Bitcoin. This could be an accumulation point for the resumption of the uptrend. So bulls versus bears, I am cautiously bullish Bitcoin. I'd start nibbling on it there, right? Okay, let's go to the indices. We're going to go to the SPX 500, S&P 500. I'm just going to use the S&P cash. Flags and everything going on there. And we're pulling back, right? Healthy pullback. There is healthy pullbacks. This allows people to, they always, the old Wall Street adage, you don't want to buy when there's blood in the streets. But we have a low here, our 23% retracement, 64,000. I'm sorry, 64,000. Speaking things to existence, 6,498.93. We can see a pullback there, right? So I am short-term bearish, but this still is up. This is an uptrend, right? We have not broken this uptrend. We have the technology, AI, robotics. This is a new age, and so any pullback is going to be a buying opportunity, right? We've been on a bull market for a long time, guys. It wasn't until we did have the 2008, 2009 crash. We do have a credit issue, a shadow credit kind of bubble going on right now, and that is a lot of banks have invested in it, so in these credit, so that we might hear more about that, but it might be contained. But the pullbacks look viable. So I'm short-term bearish, but I'm long-term bullish on the S&P 500. Drop it down to a daily. You can see that even though we get these pullbacks, people are buying, they're nibbling at the market, right? We're making lower highs and lower lows, but we're also making higher lows and higher highs too. So it's really confused, right? People don't want to let this go. We might need a flushing out of the market. I would like to accumulate 6,500 or the 38% retracement, 6,182, right? If he gets that oversold, that's going to be a generational buying opportunity for anyone looking for the big wealth transfer of sorts. right? I see similar probably NQ. NQ is NASDAQ futures, E-mini futures. I'm going to use that. And you see we're pulling back. This is a healthy profit-taking decline. A lot of people liquidating, a lot of hedge funds trying to keep people from liquidating because it's, to keep the market from like totally panicking, right? But the fear index is up, and so we expect pullbacks or to 23% retracement. And the typical retracements that we've had over time have been 30% retracement. This one came 38, came right to the 38, bounced actually down to the 50, and then shot back up again, right? So we see these. This was a very deep correction. This was our tariff. The panicans. Tariffs are going to screw the economy. Oh no! And then whoom, it came back, right? So look at these as buying opportunities in the market. Don't listen to the fake news, the fake media. Find yourself an independent news source which can keep you abreast, because if you sold and liquidated, you missed all of this listening to a bunch of people who are against America, against our government, against everything we stand for. And if you listen to them, you would have lost out on a big wealth transfer. So again, I want to thank you so much for being on the call. And remember, come over to EliteTradersUniversity.com. We have lots of free resources here. We have our Income Boost ebook, which you can download absolutely free, and talks about the explanation. It gives you tips and resources and valuable discounts. Get your free copy of our Income Boost Blueprint using Forex. Also, we have a free masterclass as well called 4 Pillars for On-Demand Trading Profits. You can go ahead and you can attend the masterclass as well. If you're interested in our videos or Forex courses, we have our Forex Foundations course, which is on sale now. There's about 8 seats left on that as well. Okay. So anyway, we have lots of materials there, and check out our My Market Heat Map. Check that out as well. Absolutely free. Just go to the site. You don't even have to use an email address or anything. Just go to the front, see what's going on. Green is up, red is down. I'll talk to you later, guys. I want to thank you so much. God bless you guys, and peace and pips. We'll talk to you. Thank you. Bye-bye.